Okay, welcome everybody. Thank you all for coming out tonight to our home buyer workshop. This is the first one that we've done in Lawrenceburg, and hopefully we can do these annually for everyone. So I am Teresa Hurst, and I am with Town and Country Bank, who's sponsoring the workshop today. And I've been with the bank for 36 years, and I'm the mortgage lending manager for Town and Country Bank. Town and Country Bank has been around since 1907, so we're not new. I know we've just been in Lawrenceburg for 10 years, but we've been around in Bardstown and Nelson County area since 1907. So think about that. You know, that's 112 years of lending. So we have a lot of lending experience in our community and in Lawrenceburg. I have a great mortgage team. And I'm missing Benita. Benita, you need to be up here as well. And our mortgage team, we have over 132 years of banking experience just between us, okay? So, and we received in Nelson County, we received the best mortgage company in Nelson County. And we've received that award the last 3 years. So feel confident when you come to get a mortgage with us that we will do the best and give you the best mortgage loan out there, because we do know a lot, okay? Our mortgage lenders here, first one I have over here in the red is Miss Carla Smith. Then we have Kristen Ross, Janine Coulter, Cindy Sanders, and Benita Riggs is our loan assistant. That means she keeps us all straight.
3 inches of paperwork together. That makes sense.
So anyway, we also have from our Lawrenceburg branch here, we have, if you ladies would stand up in the back, okay? Or come around over here if you want to, okay? And we have Sydney Cunningham. I'll do that again so you can be on camera. Sydney Cunningham. Roxanne Effington, she's our banking center manager here. And then we have Heather Courtney, and Heather just joined us recently, and she'll be doing consumer lending. So, all right, okay. Today's agenda that we are going to discuss today is getting ready to buy a home, buying your home, getting your mortgage, closing your home loan, and being a successful homeowner. So basically, we're going to tell you how to buy a house and how to maintain it, all the way from the very beginning to the very end. So getting ready to buy a home, this section will be taught by Kristen Ross.
Thank you. All right. Thank you. Hello. I'm Kristen Ross. A little bit about myself. I've been in banking for a little, almost 15 years, and I've been with Town and Country for almost 6. So today we're going to go over getting ready to buy a house. Did everybody check in on Facebook? Perfect. Okay. Now, who here is ready to buy a house this year? Anybody? That's a dream? It's a dream? You're going to buy a house? That's great. All right. So let's just kind of go back to the basics. Let's get established, okay? So you want to get financially and you want to get some credit established, okay? So how do we do that? Opening a checking and a savings account. That's your first thing that we need to do. You need to get a good checking account established with a local bank, get a relationship there. You want to maintain enough money in that account so you don't overdraw your account, because you don't want to have overdraft fees. You don't want to overdraw your account. It doesn't show very good history. So, and then also on your savings account, you want to start putting some money into a savings account. That shows that you're able to save. Then the next thing you want to do is apply for credit gradually. So how do we do that? Well, you can go to your local bank, like Town and Country Bank and Trust Company, and get a savings secured loan. That there will help you establish some credit, or you can get a retail store credit card. How do you do that? You literally just go to the store or go online and apply for a credit card. You want to remember that a credit card is easier to obtain because most times you don't have to have a credit score, or they take lower credit scores, but they do charge higher interest and higher fees. So always make sure you're using your credit cards wisely. Then you want to make sure that when you are using those credit cards, you're using them for small purchases, because the key is to always pay off your balances. So by making small purchases, that'll start your credit gradually, because you don't want to get over your head right at the beginning. Okay. So what is credit? Credit's something that you use to buy something with either no money down or little money down. And there's two types of credit. There is your open-end credit, which is your credit cards. So that is something that you have and you can use over and over and over again. If you have a credit card and you pay it down, you can use it again. You don't have to apply for it every time. And then the second one is a closed-end credit. That is like your auto loans or your personal loans. Those, once you get your loan amount, you pay it down. Once it's zero, it's called paid off. And if you want additional money, you'd have to go get more. So, how do we get a credit score? If you have no credit score, these are the 5 components that will help you gain a score. So 35% of your score is from your payment history. So what does that tell us? We never want to make late payments, because that's most of the whole pie there. So don't make late payments. 30% is the amount owed, like on your revolving debt. 15% is the length of credit history. 10% is new credit. And then another 10% is the type of credit you use. So, things to remember, once again, don't ever make a late payment. That there can affect your credit score for almost a year, sometimes even longer. You don't want to max out your credit cards. So, I got there in green, 30% rule. So, what is the 30% rule? So, let's say you have a Walmart credit card for $300. You never want to put more than 30% on that credit card. So that's $90. So use that card for gas or groceries and then pay it off. That there will boost your score extremely fast. Then you want to set up a household budget. This will determine what you can put on your credit cards. Because if you don't put it in the budget, how do you know what you can go and spend on that credit card? And you're going to want to pay it off every month. So budget for that. And then, of course, check your credit scores once a year. You have fraud out there. People do make errors. So make sure that you're taking the responsibility and the initiative to check it. Sometimes people come in and we have to discuss repairing credit. Bad credit can be fixed. It's not a life sentence. You can repair it. It does take some time to do that. So the very first thing that you want to do is start making your payments on time. If you have little medical collections or you owe an insurance collection, pay those off. That will help your credit immediately. It will help you a lot. So let's start to talk about the next important thing. It's saving and budgeting. So an important step is getting ready to buy a house is to figure out what you can afford. Well, how do you know what you can afford if you don't have a budget? So what I suggest is to just sit down, be honest with yourself, and say, what expenses do I have? Sit down, put it all on the table. Write down your expenses, and then write down your income. Now, there is a budget sheet in your packet on page 41. If you want to turn to it, you can look at it while we're talking about it. This will help you establish a budget. It will help you fill in the blanks there. So, some of the steps that you could take in creating a good budget is preventing or reducing impulse spending, increasing your savings. So I got a little thing here. It says even $20 a week adds up to a little over $1,000. I don't know about you guys, but $1,000 is a lot of money to me. It's a really good savings account. So even $20. That's husband and wife going out to dinner. $20. Cut one week out. One meal out a week. And that could be your $20. Remember to always be honest with yourself, because a budget is simple, it's logical, and you don't want to make it unrealistic, because you don't want to set yourself up to fail. So be honest with yourself about your budget. Did everybody find that budget sheet on page 41? Okay. So once we have those things met and you're ready to come in to Town & Country Bank and Trust Company to get pre-qualified. Why is getting pre-qualified so important? Well, it helps you know what your budget is for when you go and buy a house. So by coming in, we can sit down and we can look over what's called your debt to income. So what is debt to income? Well, that is a ratio that we use to determine what you can afford. So, for an example, you take all of your expenses and you divide that by your income and you get a percentage. That percentage is used to determine what your budget is. Most of all of our products have a 29-41% ratio. What is that? Okay, let's break it down. 29% of your income will be used for your household expenses. So that is your principal and your interest and your taxes and your insurance and any mortgage insurance that you have to have. So that total monthly payment that you'll make every month cannot be no more than 29% of your income, okay? So then here comes the 41. You take that total plus all of your other stuff, auto loans, credit cards, personal loans, child support, alimony, 401k loans, those type of expenses, and that total plus your mortgage total cannot be no more than 41% of your total income. Things that are included are cell phones, insurance for your car, and stuff like that. That's why it's at 41, because you have to have the budget there to pay the rest. So by coming in, getting pre-qualified, you will leave with a fee worksheet, what we call it, and that will tell you what your estimated purchase price is, so that what your budget is, your max budget, what that estimated monthly payment will be. That will include your escrows again, which is your taxes and your insurance and your mortgage insurance, and then how much down payment and closing costs that you may need also. So what do we need to get pre-qualified? Well, when you come in, you can either walk in, call, set an appointment. You know, we are located in Nelson County and Bardstown, but we will come to Lawrenceburg. I will come up here, go to, Brandon Road, we'll do all that. You'll need your 2 years W-2s. If you are a self-employed borrower, you'll need 2 years of tax returns, 30 consecutive days of paycheck stub. So if you get paid bi-weekly, you'll need 2. If you get paid weekly, you'll need 4. They need to be consecutive to show your year-to-date. And then have a list of employment history and your current debts. Kind of bring that budget sheet in so as we can kind of go over it. And then your statement for your checking and your savings account. If you have a Town and Country Bank and Trust Company checking and savings, I can save you a step and I'll print your statements for you. Okay? All right. So I know that was a lot of information pretty quickly. So what questions do we have? Any time? No? All right. Next up, we have Carla Smith.
Hi, everyone. My name's Carla Smith, and I have been in mortgage lending for 15 years. I've been with Town and Country Bank for 4 years now. And I'm going to talk about buying your home. So in your workbook on page 43, there's a comparison chart that you guys can look at. And that's going to have a list of different things that you'll want to consider when you're trying to pick the right home. It gives you 3 columns so you can compare 3 different homes, because a lot of times when you're going through this process, you do look at a lot of different homes, sometimes on the same day, and things can start to kind of run together on you. But what you're going to want to do is consider your must-haves versus your nice-to-haves. Your must-haves are the things that are deal breakers, the things that if this house does not have a second bathroom, it's not going to work for our family, things like that. Nice-to-haves might be, it comes with a certain kind of appliance, or the yard is already fenced in. Things that you could always do later, but it'd be nice to already have it so you don't have to. Then other things to consider would be the location and neighborhood. You'll have to think about, commuting to work, because as Kristen talked about in a budget, a commute to work could affect your budget as far as gas costs and things like that. You'll also want to consider taxes, because that is something that is going to be included in your monthly payment. The age of the home. An older home is going to have more maintenance, more upkeep. A newer home, it'll be a few years before you have to think of any of those things. Utilities is going to be a cost that you'll have to consider. That'll be something you include in your budget, but we're not going to calculate that in the ratio that she was discussing. And then condition and maintenance concerns, that kind of falls in with the age of the home as well, because those are things newer homes should be in good condition. And then size and space. How many rooms do you need? Do you need a 3-bedroom house, a 4-bedroom house? How many bathrooms? things of that nature. Those are all things that you're going to want to think about before you even get into the looking process, so that you do know what you are looking for. And then, who helps you buy a home? Got all 5 of us here. We'd be happy to help you go through any of those things, talk those things out. But of course, you can also use a real estate agent. There are buyer's agents and seller's agents, and they are a little bit different. A seller's agent is going to already have the property listed. They've already got a contract with the seller. You can always call that agent to look at the property and to talk about making an offer, or you can go out and find your own buyer's agent ahead of time. The agents are going to earn their commission from a contract that the seller has already made with their agent. So whether you have a separate agent or the same one, the amount of commission that they get paid is the same. So it does not cost you more if you go out and find an agent that's working just for you to look for properties to look at. So that is something that you can take advantage of without thinking that it's going to cost you extra money out of your pocket up front. If you do have an agent, make sure that you tell them exactly what you're looking for. Be specific. You know, that is what they're there for. They're going to look for a home with the right amount of rooms, the right location, and all of those things. So if you're using an agent, make sure that they're doing that work for you and you don't have to. Expenses that you can expect during this process. There are a few things you'll have to take care of prior to closing, and one of those is an earnest money deposit. Whether you are working through an agent or through a for sale by owner, the seller is probably going to want some kind of deposit so that they know that you're serious about buying the home and that you are going through this whole process. They're also going to want a pre-approval letter or pre-qualification letter. And that's something that you're going to get from one of us. That's something that you do need to see a lender before you go and make that offer to get. That lets you know exactly how much you can afford. That's what we're going to be able to give you after you've sat down, as Kristen mentioned, and talked about the budget and those ratios. And, you know, not only those ratios of 29 and 41 that she mentioned, you may not be comfortable with a payment that goes all the way up to that 29% of your income. That's something that we can discuss as well. You don't want to take a certain house payment because we say you can afford it on paper. You want to look realistically at how you spend money each month and make sure that that payment is something you're comfortable with and that you feel comfortable spending, because buying a house is a big expense and you're going into most likely a 30-year mortgage. So another thing you're going to do ahead of time is a home inspection. This would come after you've made an offer and it's been accepted. You're going to want to make sure that you put into your offer a contingency that the house passes inspection or that they will repair things ahead of time. Once you get that home inspection, you're going to learn a lot about the house that you've just made an offer on. You're going to learn if there are too many repairs for you to deal with. You're going to learn if there's something that has to be repaired prior to closing. And those are things that you'll sit down and either negotiate with the seller or have your real estate agent negotiate with theirs on to get repaired ahead of time. When you get to closing, there are your closing costs. That's going to include a title exam. That's something that makes sure you're getting a property with a clear title. That means that there aren't any liens or judgments from a previous owner attached to it. If those aren't taken care of ahead of time, that can be a headache for you in the future. It's also going to include any kind of document preparation, underwriting, processing. We'll go over all of those in depth with you prior to getting to this closing, so there will be no surprises. What we will actually do ahead of time is start with a fee sheet. So the first time you talk to us, you're going to get an idea of exactly what to expect to spend. We're not going to surprise you with anything when you get to closing. At that, we will also do your first year of homeowner's insurance. We're going to collect that up front, and then we're going to collect a little bit of your insurance to start what's called an escrow account. An escrow account is going to pay your taxes and insurance for you annually, and that helps with budgeting. It helps eliminate any surprises, any large bills coming in all at once. Instead, you just pay 1/12 of that annual fee each month with your payment, and we'll take care of that for you. It makes all of that much easier, especially when you're in your first home and these are expenses that you've never had before. Some different things to consider when you're making your offer. You want to consider the contingencies, which we talked about a little bit with the home inspection. But if this is not your first home and you currently own one that you need to sell first, you would want to make sure you put a contingency in there that you sell your home first. The seller may want to have a few days to get out of the house after closing. So they may have in there, you know, no possession until 5 days after closing. And that's just, these are all things that you all will discuss ahead of time. There'll be contingencies in your contract. And that just makes everything smooth when you get to the end. And then, of course, the seller's going to want that pre-approval letter so that they know that you can afford to buy the house, that you can afford what you've offered. Another thing that could come up when you're making your offer is a counteroffer. They may have the house listed at one price, but you want to try to get in for a little bit less. Or maybe you want them to pay your closing costs. So these are things that you guys can negotiate with, and you'll make your offer what you want to pay, or if you want them to include that. And they may come back and say, well, we'll pay the closing costs, but we want a little bit more for the house. Or, you know, we're not willing to go quite that low. And that's common. It's not unusual for that to happen. So, you know, don't be worried if you make an offer and they come back with something else. Things to know about a home inspection. It's going to take about 2 to 3 hours. So you need to be prepared to sit there and kind of learn things about the house. They're going to look at everything. And then, of course, including it in the contingency. And this is going to be a negotiating tool. This is something that could either help you get the house for a little bit less or just let you know expenses that are going to come along early on. And this is going to also help you understand the home. You're going to know, you know, how much life the roof has left in it. Things like that that you wouldn't know just by looking at a property. So, do we have any questions on the process of going through a home search?
So my segment that I'm going to discuss is getting your mortgage, okay? So in this section, we'll talk about the choices you have shopping for a home loan, okay? So Kristen talked about this, Carla talked about this as well. But when you go to the bank and you get a loan, well, really any kind of loan, you're going to make principal and interest payments every month, okay? Principal is the portion of your payment that is used to reduce the balance. So, like if you get a 30-year mortgage, your payment's going to be a lot less than if you get a 20-year or a 15-year mortgage, okay? So the reason your payment's a lot less is because less is going towards your principal every month, okay? So if you take a shorter loan, a 15-year loan, your payments are going to be higher, but you're increasing your equity a lot faster, okay? So when I say equity, that means your ownership in that house, okay? So, and then interest, the part of your payment would be the portion of the payment that's used to pay the interest. So with the higher interest rates, the higher your payment. The lower the interest rate, the lower your payments. So, and then taxes and insurance. Carla and Kristen both talked about escrows. So that is where you pay 1/12 of your property taxes every month, and you pay 1/12 of your homeowner's insurance every month, which is great, especially for first-time home buyers, or really any home buyer, because it helps you budget. The tax bills always come out in October, okay? Right before you start thinking about buying Christmas presents for your little ones, you know, and then you get this big tax bill. So, you know, it could be $1,000, $1,500, okay? So, but if you're paying, if it's $1,200 a year, then you're just paying $100 of that each month, and you don't have to come up with that $1,200 out of your pocket. It's been added to your payment. So it's really a great way to budget, and the kids still can have a Christmas. So, and then your homeowner's insurance, even though that is added to your payment every month, you can still shop for homeowner's insurance. You're in charge of that policy. You just have to make sure that your insurance agent knows that the bank will be making your payment. They will be listed as mortgagee, and they will be mortgagee billed. So again, you can still shop from, you know, change your insurance from year to year, however you want to do it. You're in charge of the policy. types of mortgage loans. We have fixed rate loans, which of course are the most popular, and that's what it is. Fixed rate means fixed. The payment will never change, okay? The principal and interest part of the payment will never change. The only time your payment will ever change if you have escrow is if your taxes and insurance change. And they usually do change, okay? So, but a fixed rate means fixed payments, and that's the most popular. And then there's also non-fixed payments, and those are known as adjustable rate mortgages, which we call those ARMs, so adjustable rate mortgage. So again, ARM loans can be fixed for 5 years, fixed for 1 year, fixed for 15 years. We have a in-house product right now that's fixed for 15 years on a 30-year amortization. But if you're going to get into an ARM loan, you're going to, sometimes the interest rate may be cheaper than the 30-year fixed. Sometimes it may be, or you might want to get into that because you think, well, I'm not going to be in that house very long. I might only be in that house for 5 years. And so I'm going to take this lower interest rate or these cheaper closing costs. So, but basically what you have to count on is your lender, and for your lender to show you the different products and what is best for you, okay? So mortgage products that we offer at Town and Country Bank are all these listed, okay? A VA loan, it's a great loan. So if you're a veteran, it's 0 down payment, 100% financing. And FHA loans, that's Federal Housing Administration through Housing and Urban Development, and those require a 3.5% down payment. Rural housing loans, of course, rural housing loans, you can't get them in Fayette County or Jefferson County, but Anderson County is a rural area, so all Anderson County is a rural housing area. So, but that is a 0 down payment, so it's 100% financing. It's a great loan. It's a great loan for first-time home buyers, especially when we get to my grant slide. So, now conventional loans there's 2 types of conventional loans that have no mortgage insurance, but if you don't pay mortgage insurance, then you have to have a 20% down, okay? So a lot of first-time home buyers do not have a 20% down payment. So, but then you can get other conventional loans with 3% down, 5% down, 10% down, 20% down. So again, you just have to come in, we'll take your application, pull your credit, and decide which product's best for you based on how much money that you want to bring to the table. And then Town and Country Bank, again, we have what we call our Bank on Us product, which we have a 15% down payment, and there's no mortgage insurance. So, but a lot of times, and that is a really good product, okay? So what is mortgage insurance? I've been throwing that word around a whole lot. Does anybody know what mortgage insurance is? Well, it's not life insurance, okay? And a lot of times people think it is. You know, they say, oh, I got that mortgage insurance on my loan. Well, yes, but that mortgage insurance, it doesn't insure you at all, okay? It insures that mortgage company because you did not put a 20% down, okay? So it insures the loan should your loan go in default. We pray it never goes in default. So, but a lot of times people think it's homeowners insurance or life insurance. Homeowners insurance, yes, you have to have. Homeowners insurance covers you should you have burglary or fire. And life insurance is a good thing to have, especially if you're going into buying a home and so to pay off the loan, okay? But PMI or MI or MIP, whatever you want to, whatever people call it, it insures the lender. It does not insure you, okay? So, but it's a great thing because with PMI, it allows you to buy a house sooner. That way you don't have to save up for that 20% down to get a conventional loan. So, and you can less funds to the table. And then PMI on conventional loans, it goes away after you get to a 78% loan to value. It just automatically goes away. But on the FHA loans and the RHS loans, you pay it for the life of the loan. Mortgage product limitations and guidelines. So on a VA loan, not everybody can get a VA loan. You can only get a VA loan if you're a veteran. That's right. That's right. That's right. So you have to be a veteran, and you have to have your certificate of eligibility, okay? Or your DD-214, and we can request your certificate of eligibility. And then FHA loans, yes, you have to have a 3.5% down. But say you don't have that 3.5% down, okay? You can get your down payment from a grant or a gift. You can get it from a gift from a parent or a child or someone else like that. So you can get a gift. RHS loans, they're 100% financing. But if you make over these income guidelines, it's $82,700 for a 1 to 4 person household, and then $109, $150 for over 5-person household. If you make over those income, you don't qualify for RHS. Okay? So, but if you make under that, you do. Okay? And that's 100% financing. And the mortgage insurance premiums on that product are lower than on the FHA. It's a really, really, really good product, okay? So, the interest rate, the better your credit score, the better your interest rate. So that's why it's always a good idea to come in and get pre-qualified so we can show you which product and what your interest rate would be. So, this is a good thing. This is a great time of year to buy a house. Do you know why? Because we have grant money available, okay? So we have, Town and Country Bank is a member of Federal Home Loan Bank. So we can give away up to $200,000 in grant money, or until it's used up. And it's usually used up before we can get it all reserved. But the grant money is available, $5,000 to assist home buyers with their down payment and their closing cost. You have to bring $500 of your own money to the table, okay? So basically on the rural housing product, pretty much you can get into the house for $500 under certain purchase price loans. If you're a veteran or honorable discharge and active duty veteran member, then you can get up to $7,500 in grant money. And this grant is wonderful, okay? It's a 5-year forgivable grant. So each year or each month, 1/60th of it is forgiven every month. If you sell your house within, say you sell your house within the 3rd year, then you may have to pay back when you sell your house $2,000 of the grant. But that's only if you sell your home at a gain and your income at that time exceeds the grant money limitations. Okay? So we listed the counties here, all these counties, and they're all in the Channel 6 viewing area too, where we have the income guidelines to qualify for the grant. So the grant is used in connection with your loan, okay? So if you qualify for the rural housing loan, okay, and you make under the income guidelines for the grant, qualify for the grant. You qualify for the FHA loan, then you're under the income guidelines for the grant, then you qualify for the grant. I mean, it's a great time. The funds come available on March 4th, first come, first serve, but we get it every year. So if you're not ready this year, okay, you've come to the workshop, you know what to do to prep, give us a call, February of next year. Hey, I'm starting to look for a house. Are y'all going to get that grant money in? Well, yeah. As long as Federal Home Loan Bank has that, yes, we will participate in this grant money. Okay? Anybody have any questions on the, yes, okay.
Are those the only counties?
All 120 counties have it. So just let me know which county you want. I'll look it up and I'll email it to you. Okay? So, mortgage application. Okay, like we said, we come to Lawrenceburg. We come to you. But you can go to our main office down here on the bypass. You can send in, your paycheck stubs, your W-2s. We can work with you, email, internet, however you all want to do it. And when you come in for an application, these are the items that we're going to need. And Kristen kind of went over these, but we're going to need your tax returns and your W-2s for the last 2 years. Your employment history, we need to know where you've lived and where you've worked for the last 2 years. And we're going to need your paycheck stubs for 30 days, okay? And your savings and checking account statements for the past 2 months. Unless, like Kristen said, you bank at Town and Country, then we can pull them up for you, okay? So, and with that, then we'll take a handwritten application and we'll pull a credit bureau, and we can pre-qualify you, within what? How long y'all think? 15 minutes? I mean, it's that quick. So we can pull your credit right there. You say you scan it and you email it to us. We get your application. We can pre-qualify you and tell you, based on this information, this is the type of loan product. We can give you several different scenarios. And again, just because you qualify for a certain type of loan, also the house has to qualify for that type of loan too. Okay, so you get into a lot of tricky type financing when you come to manufactured homes or modular homes. Okay, so and then documents. Once we pre-qualify you or pre-approve you, whatever, then we're going to give you a fee worksheet, like Carla said. Okay, and then once we get your purchase contract, then we're going to give you a loan estimate. And I put a loan estimate in your packet, and I did a scenario of a loan estimate based on $140,000. And I came up with that because that's kind of the median price home, and just to show you how much the payment would be. So do you all see it? It's the one that says loan estimate. And on this loan estimate, your lender will give this to you. That way, and you will sign it, and you will know exactly what your fees and everything will be. On the loan estimate, this one that I did it for an RHS loan. And remember that RHS loan was that 100% financing loan, okay? So, and it was for, purchase price was $140,000, and I did a 30-year fixed rate purchase, okay? So when you look at this, it shows you the loan amount. The purchase price is $140,000, but you're borrowing $141,111. And the reason you're doing this, on the rural housing loans, they have monthly mortgage insurance, okay? That's that thing that insures them should your loan go in default. And they also have upfront mortgage insurance, okay, should your loan go in default. But what they're going to do is they're going to let you finance it. So they let you add it to your loan amount, okay? So it's 1%, but they're going to add it to your loan amount. I just plugged in an interest rate of 4.5. That's probably a little high based on today's rates, but I just kind of, again, your interest rate's based on your credit score. So if you have a better credit score, better rate. And so based on that, your monthly principal and interest payment is $714.99. Okay? So wow, that's not bad. I can afford that. Well, let's go on down. Okay? Let's look at our projected payments. Okay? Because then when you look in the next block area, it shows your monthly principal and interest payment is $714.99. But then we have mortgage insurance, which is $41 a month. And then we have your estimated escrow. And we're just kind of saying, based on the tax rate and a homeowner's insurance of $100 a month. So your total payment would be $994 a month. Okay? So, and then based on the scenario, if you flip on the second page or the back where we have it highlighted, okay? This shows you all your closing fees, and Carla was talking about that, your got your processing, your underwriting, your appraisal, your title search, your title insurance, your, setting up your escrows, okay? But what is in yellow is your $200 lender credit that you get for coming here tonight, and we will mail to you, okay? And then we're showing the $5,000 grant, okay, as a credit to you. That's assuming that you qualify for the grant, okay? So your total estimated to close based on this scenario is around $565, okay? Not bad, is it? Not bad at all. Anybody have any questions on this? And I just showed rural housing. If it was going FHA, it'd be different because you'd have more injection. Yes, ma'am.
Are you required to have mortgage insurance if you apply for the loan?
Yes. If you get, unless you have a 20% down.
Okay.
Okay. Yeah. So, but the $41, that's that mortgage insurance. Okay. That $41 is just, that's the lowest premium of any loan out there for mortgage insurance with the zero down, okay? So conventional loans, your mortgage insurance varies on how much of a down payment you have and your credit score. So if you were going to get if you had like more money to put down, we may look at a conventional loan for you, and that might be your best scenario, okay? And then a commitment letter. I clicked before I should have, but a commitment letter, once we pre-qualify you, then we can type up some type of pre-qualification letter, because a lot of times the realtor won't even take you out and show you houses until he knows that you've already been to the bank to get pre-qualified, okay? All right, so now, okay, so you've applied for your loan, you've got a contract on your house, so you signed all your paperwork for your loan application. Now, this is when, we go to work. So we're working behind the scenes. So the loan is reviewed by us, by the lender, and then we order the appraisal for the house, because the lender's going to require that appraisal be done to make sure the house is worth the price that you are willing to pay for it. If that appraisal comes in low, we'll contact you and say, well, the appraisal came in low, and so therefore you go back to the table. You talk to your realtor and say, what do I do? And so the realtor will have to negotiate with the seller, and if it appraises low, then it appraises low. So you either have to pay the difference if you really want the house, or the seller can come down on the sale price. Okay. And then title insurance is requested, and title is a title search. That's what the attorneys do. They go back and they search the records for 40 years just to make sure that you're getting a clear title to the property. All mortgages are paid off, all liens, if there's any judgments or list pendants. So that's what the attorneys do. Then we order a flood to make sure it's not in the floodplain. If you do find a piece of property in the floodplain, we can get a loan only through FHA. Rural housing won't lend if it's in the floodplain, okay? And homeowner's insurance, of course, again, you're going to start talking to your insurance agent, and a lot of times you just call the one that you have your car insurance with, okay? Because a lot of times you can get car, home, auto insurance just as cheap. But feel free to shop around, again, with any insurance agent you choose. So, and then the loan is sent to underwriters for final approval, okay? And if they have any conditions, they might want another paycheck stub, or they might ask for a letter of explanation on an inquiry on your credit or something. They can ask for anything, and we have to give it to them, okay? So, but, and then loan process usually takes about 30 days, sometimes 45. So, but that's usually the norm. Okay. All right. So, does anybody have any questions? Okay. All right. Okay.
Okay. Hello, everyone. My name is Janine Coulter, and I'm a mortgage loan originator with Town & Country, and I've been here now for 12 years. And today I'm going to talk with you about the last step before you become a homeowner, and that is the closing. So as Teresa said, the whole process usually takes on average around 30 days. We would get approval on your loan from the mortgage company and then give you a call to get the closing scheduled. We're going to call you in advance, work with your schedule the best we can. That way if you have to take off from work or anything like that, then you would have time to do so. Okay, so Teresa talked about the loan estimate that was in your packet. There was also a form called a closing disclosure. And so this one's really important to review. It has all your final figures, all your final fees. It shows, you can really kind of put these side by side and just see how that they're laid out the same. And that's by design. They wanted to make it easy for the consumer to make sure that they were getting the loan that they applied for. So you can just kind of go down and, my loan amount's the same, my rate, the principal and interest. And then, so the closing disclosure is going to show kind of the final payment, and then it's going to show your total amount that you would have to bring to closing, if anything. And so on this example, we showed $500, and that's if you were getting the grant money. So really, you just want to go over that form with a fine-tooth comb. If there's any questions at all, feel free to call us, your lender. We can go over it with you line by line on the phone, or you're welcome to come in as well. Okay, so items that you would need to bring to closing. It would be identification of some sort. So 99% of people bring their Kentucky State driver's license. You can also bring your Kentucky State ID, passport, or a military ID would work. And so really the important thing to remember about those is just to make sure they're not expired. Okay, so in that example we showed that the customer would bring $500 to closing. And so that can't be cash, it can't be a personal check, but it has to be an official bank check or cashier's check that you would have to go to your bank to get. Of course, if you bank at Town and Country, we happily get that prepared for you and get that to the attorney's office. Okay. So who will be at the closing? You will be there, of course, your Town and Country Bank lender, the closing agent, and then your realtor, if there is one involved, the seller, and their realtor. And so really kind of how we like to do closings is we like to kind of have you and your team in the closing room at the same time. So it would be, you, the lender, the closing agent, and your agent. That way, if you have any questions, you just kind of have your team in there to support you during that time. And then kind of once you're done with your part, the seller would come in with their agent. And so we already talked about the closing disclosure that you would have to sign at closing. And so you would see this in advance of closing, so you wouldn't have any surprises. And then you would also have the promissory note, the mortgage and deed. And so that mortgage and deed, that's going to be recorded at the clerk's office of where you're buying your home. And then there's quite a few other documents and disclosures as well. If you're doing a government loan, like the RHS or VA or FHA, it's a pretty thick stack of papers, so just come ready to sign. And then again, just don't hesitate to ask questions while, you're in the closing room. So congratulations, you'd be a homeowner. And so really kind of, after closing, the closing agent is going to go make copies for everybody so that, you would have records. And really at that time, it's really important to kind of get with the seller and, you would have agreed upon a possession date. when you sign the purchase contract. So just, while you're there with the seller, just kind of verify that, yeah, we're still on for, 5 days from now, or, I'll give you the keys today, or, so it's just kind of, just kind of touching base with that seller again. Other important questions to ask the seller would be to verify who your water is through, who your electric is through, and then, if you are taking possession, say next Monday, you would want to go ahead and call those places and have them transferred to your name, on the day you take possession. Because you wouldn't want, like weather that we had a few weeks ago where it was negative temperatures, you don't want the electric to be cut off and then you end up with a frozen pipe right off the bat. So other things to ask the seller, who provides satellite or cable in the area, who provides internet, and then lastly, the trash pickup day. So you're going to be moving, you're going to have all kinds of boxes, and it's just important to know what day that trash is going to come. Any questions on the closing portion?
My name's Cindy Sanders, and I've been with Town & Country for 36 years as well. Now I get the fun part. Now you own it. And there's no place like home, but I got my muck boots on because it's still work and responsibility. Now you're responsible for mowing the lawn, weed eating, snow removal, ice removal. If you got little pests running around, just your routine maintenance. In your little handy dandy books Benita made up for us, there are pages 45 and 46 show a little maintenance checklist for the spring and the fall, things to check for. And like I said, I do have my muck boots on because with this rain, I've got a sump pump. I've been digging out the ditch line. It's just, there's always, and mine's still a fairly new home, but there's still maintenance, no matter if it's an older home or a newer home. Things though, with the purchase of a home, do you have outdoor equipment? These are things you'll have to budget for as well when you're deciding to be a homeowner. Do you have a hammer, screwdriver? Truthfully, something I had to get. Appliances, sometimes they'll come with the home, and then if it's an older home, you might want to spruce it up to your expectations. You might not like the paint colors. You might want to go in and make it your home. So you're going to have to budget, as the girls have spoke, principal, interest, taxes, and insurance, but pay yourself as well. Set back. Even, God forbid, but if that tree limb fell on your house, you're probably going to have a deductible. Is it going to be $500 out of your pocket first before your insurance will come in and help you? So make those little sacrifices. If you go to McDonald's, like I've been guilty of buying that Coke every day, if I just stepped back and started putting that in my little coin bank, that adds up to more than $365 by the time I pay my tax on it. So just pay yourself, set that little budget up so that when these unexpected things come up, you're ready for them. And don't forget, enjoy your new home, because there's no place like home, guys. And that's it. Do y'all have any questions?
Okay, again, I'd like to thank everyone for coming. We will stick around if you all would like to meet with any of us one-on-one, okay, and ask any questions. I do want to get your email address so I can email you the county. And just feel free to, like I said, just stop, talk to any of us, and there's plenty of food back there, okay? So thank you all again for coming, and
thank you.
Hope you learned a lot. Hope you're motivated and educated. Thank you.
Thank you.